Hey guys, this is Mobashir and today we are going to watch the weekly market snapshot for this week. Okay, so basically we are going to analyze what's going on in the current market scenario for the domestic, for the global, and also for the crypto market too. So let's start with the domestic one, that is Nifty 50. So let's first check the chart of that Nifty 50. As we know that Nifty 50 was quite doing well in this week. I mean, it has gained in value. So let's check because oh, here it is. Okay, we have to watch the one how. Okay, here it is. Look at this, has gained quite good in value, like for this week. Okay, it is already up by the around 4.488%. That's quite good, right? If we check the throughout the week from this level, well, from mm, mm, okay, here it is, from 25. Nifty 50 is quite doing very good in the recent season, but was slight down because, as we know, that China has, sorry, US has imposed around 100% tariff on the China. That leads to the major crash in the, especially for the crypto market. It was the for the crypto, but it was also impacted the domestic one too. Here it is. You can see it has dropped. Look at that, around 1.3%. The next support will be here. We can see, because it has taken support earlier here, so 25663. Okay, so overall the domestic looks quite good overall if you look at that. Okay, and the second thing, it was, as we know, that the foreign portfolio investors reversed recent outflows and pumped fresh capital into the Indian equities around 6.5 thousand crores. Okay, sir. And why it is matter? Because FPI's flows are a major liquidity lever. Inflows support index gains, narrow credit spreads, and improve market breadth. Basically, the large caps and the index heavy weights first are going to benefit from that. And as we know that the room for the rate cuts as inflation is softening, right? RBI minutes and commentary shows inflation forecast revised lower, like headlines inflation 2.6% projection, and the members noting room for future raising. And as we know that because of the GST 2.0, consumption tailwind remains a live theme, right? RBI bulletin and market commentary continues to flag that GST costs are lowering retail prices and supporting the festive demand. As we know that because of the GST rate 2.0 rate cuts, people are because of the reduced price, people are starting consuming more and more, and in, improving the consumption in India. So I think it is a great time to invest only on those stuff which are somehow related to the consumption, like some like AC, fridge, washing machine, or if they even they are manufacturing the parts of those products. Okay, but still the US tariff and trade policy still are overhanging for the exporters and services, because as we know that the US has imposed around 100% tariff on the Indian patented pharmaceutical products, and also H1 visa fees, and many 50% in general tax. These things are impacting too much on the Indian exporters, and also depreciation of the rupee, that causing the importers to purchase US dollar at the higher rate, and overall their margin has been reducing, so they are facing trouble. Even importers are facing trouble because of the rupee depreciation. Exporters are facing trouble because of the US tariff. So there are too many things which is going around, and that's causing the overall we can say downtrend for this domestic one. Now let's go with the global. So I think for the global, S&P 500 will be the best. S&P Here it is. 4 chart. Okay, here it is. Okay. As you can see, S&P 500 is continuously going up and up. There is no downward side has been shown here. Here it was the downward side because of the, as we know that the US has imposed the complete shutdown. That's why it has dropped here. And afterwards it has taken the support of their previous lows, and now it is again going upward and making all-time highs. And Dow Jones also doing very good. Uh, look like something. No. Anyways, so overall the market condition is quite very good. Let's check the Dow Jones. It is not showing here. I don't know why. Yeah, it is US Tech 100 and okay. So overall the domestic one is not doing well, and the global one is doing very good. We can see that because as we know that the Trump is continuously imposing the tariffs, so that he wanted to make America great again, US great again. And overall the we can say overall the entire world market is dependent somehow dependent on the US market. So yes, it is doing very well. Even we know that the IMF trends rebalances global outlook. Risks remain till title to the downside. Right? IMF October WEO updates the global growth picture and highlights the risk from the trade tension and the policy uncertainty, because as you know that the US is playing the tariff war with the all over world. Fed 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 cuts expected, but the data blackout and uncertainty persist. The market expects further Fed easing, but data holds shutdown impacts and his mixed readings keep the path uncertain. And also the oil softened but remains unwatchable. Oil moves on supply signals, OPEC plus commentary that is, and demand worries. Lower oil eases CPI IMF concern. A supply squeeze would reverse that fast. Now let's go with the crypto, that BTC, because it dominates in the crypto world, right? Always go with the Binance. Okay, look at that. It is happening because as we know that China has imposed, sorry, US has imposed around 100% tariff on China. And as we know that the China is one of the biggest player in the crypto market. That's why it has impacted the crypto too much. We can say it was recently made all-time high of around 124, and now it has dropped from that level and went to around 103, 104, and now it is now bounce back in and now trading at 111. And we know that the Bitcoin reclaimed held key levels this week. I mean 110k. Will spot ETF flows continue to move markets? So overall, the market is quite moving around the US economy. I mean, because of the Donald Trump, he is imposing too much tariff and playing the tariff war game, just imposing the tariff and trying to get the good deal from other countries so that he can make America great again. So that's why there is too much volatility, especially in India. Now, in the US also facing the trouble, and because of the China is facing the trouble, the Bitcoin is also facing the same trouble because it is too much connected with the China, because the major players are from the China in the crypto market. So thanks for the watching. Have a nice day.